Welcome to the Traders Expo 2017 here in New York City. I'm Matt McCall, joined by Shawn Howell. He's co-founder of Pro Market Advisors. Shawn, thank you very much for joining us.
Thanks for having me back on, Matt.
So let's talk a little bit about some of these strategy ETFs that are out there right now. I know we talked about options before. There's some ETFs that actually work in options into their strategy.
Yeah, the exciting thing about exchange-traded funds is they continue to find sort of new ground, I think, for the individual investor and trader. One of the things I've been talking about here is a pretty complex strategy called the diagonal spread. I know you mentioned that before this interview you were talking about covered calls. Well, for the investors that understand the concept but they don't want to commit the time or the energy to doing those strategies or managing them, you can actually invest in an ETF that trades like a stock in which the ETF managers behind the scenes are doing strategies like covered calls, diagonal spreads, horizontal spreads, vertical spreads, things like that. So by buying, in one fell swoop, you're essentially buying into a strategy, if you will, and it's a very defined strategy.
Does it concern you when you're basically putting the strategy into somebody else's hands, or is that because they are the experts that they should be able to handle it?
You know what I think is very interesting about it is when you take a look at the exchange-traded funds, sort of their prospectus. What is their goal, and it's more strategy through formula. So, for example, you could look at an ETF that'll buy into the 100 stocks that make up the NASDAQ 100, and then they will sell the out-the-money option, and they'll tell you it's one strike out, or it's one standard deviation out. So it's a formula, and then before expiration they'll buy it back and they'll roll it forward for another month. So it's pretty much a prescription as to what they're going to do. Now, of course, the issue with something like that is they will do it regardless of the market's behavior. If the market's bullish, bearish. So these strategies, it spells out, here's when the strategy is going to work well for you. In a sideways market, this works well. In a slightly bullish market, it works well. Slightly bearish market, it works well. Big moves to the upside, it's going to underperform. Big moves to the downside, and you're still going to get hit.
Yeah.
So it tells you this is when it works and this is when it doesn't work.
So basically, the market that we've been in for years now, it works well because
exactly.
We're slightly up, sideways for a little bit.
Yes.
So if we have this correction that everybody's talking about, which I think is not going to happen anytime soon, then we have to start maybe reconsidering this type of ETF.
Yeah, you're not really buying into their management expertise. You're buying into a strategic concept. And there's a lot of them out there. There's, for example, the cash writing index. There's the covered call writing index. There's the covered call writing one standard deviation index on the S&P 500. And the Chicago Board Options Exchange has a lot of these indices that show how this strategy would perform over a decade. So you can look and you can say, the one I'm most confident is going to be the S&P 500 covered call one or the NASDAQ 100. So again, you're not buying into the management skill, you're buying into a strategic approach to investing that you don't have to have your hands on.
That's a great way to do it. Look back at history and see how they performed in pullbacks.
Sure.
So you'll know exactly what's going to happen for the most part.
Absolutely.
All right, Shawn Howell, co-founder, Pro Market Advisors. Thanks very much for joining us.
Thank you.